Take a look at Bitcoin. It's only trading at around $29,000. Traders are waiting for the Fed's next interest rate decision. What will it be? I got a clue. It's going to be raised 25 basis points. But enough about that. Joining us now to discuss the crypto markets is Galaxy's global head of asset management, Steve Kurz. Welcome, Steve.
Thanks so much for having me.
I'm glad to have you here. So, of course, tomorrow, no, it won't be a big surprise. Like the market's 99 something percent, assuming that the Fed will raise 25 basis points, the Fed funds rate, what it charges to banks. We'll get into a range of 5.25% to 5.5%. That's the highest it's been in 22 years. Does it matter for Bitcoin? We've already kind of predicted this. So is it going to matter, or is it going to be what the Fed says that matters?
Well, the Fed always matters, but I think this one is pretty well telegraphed. I think what people are missing, there's two things. One, we're in the middle of a great fiscal experiment. And I think what we're learning in the discrepancy between expectations and the equity market, for instance, around a potential recession, all comes down to this notion that we're just going to have a hard landing or a recession that comes out of nowhere. And really, there's this pent-up demand that may last a lot longer than people expect, and that's an umbrella that affects every market, including crypto. So you can't ignore it. I think the language, it doesn't serve the Fed to do anything other than maintain their hawkish optionality. Now, if the data comes out in a way that does push them to go in the other direction, I do think the market is set up the wrong way. We think there are going to be a slow, steady, easy breeze of cuts, and that's generally not how it goes. So in the event where you do have a flip to a rate cutting environment, you're probably going to have more rate cuts in less time than the market's expecting, which of course could be very impactful to Bitcoin.
Right, not cutting fast enough is almost a rate hike in the mind of the markets. But there is that whole one and done idea, right? That's what we're seeing right now. When you look out into probabilities on the Fed, the Market Watch tool, there doesn't seem to be going. For the most part, doesn't seem to be going higher than this, but that doesn't seem to be what I mean. We'll know tomorrow when there's a statement, but it seems that that's not necessarily how the Fed's looking at it. That we might get another one afterwards. At what point will the market assign the proper weight to a higher interest rate?
It's a great question. I was remembering I started my career at Lehman Brothers on the bond desk, and when I started my career, we were back in these levels, and you always have the tail wagging the dog. And we've, since my career began, we've gotten more detail from the Fed and more press conferences and more information. And we still get it wrong in terms of the expectations. So I don't know that I would expect us to get any better. I think that probably one and done is the right baseline answer. We do see the data supporting that. Of course, this will be data dependent. I think the global story is instructive. What's happening in China is instructive. What's happening in Europe is instructive. It's not just the Fed that's on the market's mind this week. You have the ECB, you have the DOJ, you've got big tech earnings. There's really a lot to digest in the middle of a summer week or two, and so.
But none of them are about about lowering rates or saying that they're done. I mean, it seems that all these other institutions are raising rates also because they're looking at their own inflation rates, and they're like, gee, this isn't under control. I mean, we're better off than we were a year ago, but it doesn't mean we're at our long-term targets. The same thing with the Fed. I mean, you're recalling Lehman. I recall when we'd have to look at what kind of sandwich Alan Greenspan was eating to determine where things were going to go. So the Fed now telegraphs a lot more of what it is, and it seems like it's telegraphing we're not one and done.
Well, they need optionalities. It's an election year next year. I mean, the fiscal point is one I'd come back to, right? This is not a normal situation, and they can only control what they can control. In spite of the mistakes the Fed's made, I actually am a little charitable to them in this current environment. I do think preserving optionality around the language and to hike is the right move if you're the Fed chair today, and you don't want to get pushed around. You want to stay in front of the market and keep the hammer. But what else would they do, right? I mean, they're not going to come out and say, hey, we're done here, because they need to see some follow through. And the reality is the data has been confusing.
And we could also raise rates and still not have a recession.
Yeah, that's right. I mean, I think buying time is also a part of the Fed's strategy, and that makes sense, right? You want to give the companies that have debt a chance to readjust. You want to give homeowners a chance to readjust. You want everyone to sort of smoothly grow into this new normal of higher rates and rationalization of what we experienced in the last not just 3 years but also 15 years. And so I do think there's a little bit of playing for time that's going on.
Steve, we got to get your outlook on Bitcoin in here. There wasn't a big market reaction to the 2 lawsuits brought by the SEC against Coinbase and Binance. There was a little dip on the Wall Street Journal's story yesterday. We have the ETF race. What's your outlook?
Well, it makes sense that there's some consolidation here as a starting point. And we've seen that twice already this year where you've had a range bound for a while. You go below the range, in this case, it's 29K. And in both cases, you've had a resumption of the uptrend, which is obviously the bigger picture in terms of the 80% move of Bitcoin year to date. Medium term, obviously, we're very constructive on Bitcoin. It's not just the halving. It's not just the Fed going the other way, potentially. It's also this adoption story that you're so focused on with the ETFs in the U.S. And the global story. I think we're in a pocket here where you may test in these current levels and there will be support at 27.5, 28K. It's been nice to see 29K holding, but I think the bigger picture and the vol market is pricing this as well is that 2024 is shaping up to be a good year for Bitcoin, and there's a lot going on outside of just Bitcoin too that's important to understand when you think about how money's coming into the crypto system and where Bitcoin goes in the short term.
Speaking of short term, we have the end of the week. We have a lot of options at 30,000. Is that kind of what's holding back Bitcoin from falling even lower?
Yeah, there's a little bit of that. I think that the institutional understanding of the Bitcoin story, putting aside the vol date at the end of the week, is actually the bigger picture here. I think that unlike the last bear cycles, you have institutional knowledge around what Bitcoin is, why it needs to exist, and while people aren't telegraphing that because it's still a little bit taboo in a traditional sense to own Bitcoin, under the hood there's a lot more activity. Not necessarily volumes, because obviously that's come down since the bear market, but the general bias and directionality of institutional players has been to start to accumulate Bitcoin positions and to look for good entry points to do that. And so I think the cycle lows have been put in to get to the punchline.
All right, and really quickly before we let you go, we got to ask what your thoughts are on Dogecoin up, I believe, the second day in the row on the back of this Twitter business. What are your thoughts there?
Well, I think in the last segment you were talking about the toilet, so I maybe we'll go back to the but I'm joking. Look, and everyone's focused on Elon Musk. He has fun with Dogecoin. I think predicting the direction of meme coins is a fool's errand. The bigger picture is, you had an XRP decision, and altcoins are on some level back in vogue. So you're seeing some movement out the risk curve. You obviously are seeing, I think, Twitter making big moves and incorporating crypto into the Twitter system, whether it's Dogecoin or otherwise, is a great story potentially for crypto adoption. You're seeing WorldCoin, you're seeing the XRP story, and so there's an interesting story in crypto to be told outside of just when are we going to get regulation in the U.S. and this is obviously part of that.
X stands for Xanadu, one of the biggest flops in film history. Great film though.
That is a great film.
Everyone knows Xanadu. Fantastic soundtrack.
That's true.
But flopped. Absolutely flopped.
Well, I wouldn't bet against Elon. I don't know about on the Dogecoin side, but I think Twitter has a shot.
All right. On that note, Steve, we're going to leave it there. Thanks so much for joining the show this morning.
Thanks for having me.